Now, cash remittances from overseas Filipinos rose 2.6% year-on-year to $2.8 billion in March. This according to the Bangko Sentral ng Pilipinas. While the growth is positive, it's a bit slower than the 2.7% gain recorded in February. Now, to help us break this down and what it means for the broader economy, we're joined by Security Bank's Chief Economist, Angelo Taningco. Jello, good to have you with us.
Thank you for having me.
Okay, so Jello, the latest data from the BSP just came out. Cash remittances up 2.6% year-on-year to 2.81 billion in March. Moderating, but still growing. What do you make of this figure?
Indeed, it's a downside surprise. The market is expecting close to 3% remittance growth for the month of March alone. For us, our full-year forecast is pegged at 3% growth. And for 3 straight months, we have seen a deceleration in remittance growth. And we think that this can be attributed to the rising uncertainty caused by the trade policy led by the U.S. and is now also cascading towards the rest of the world. Likewise, we have the U.S. immigration policy also kind of restrictive and therefore dampening remittance flows. In fact, we've seen remittance flows from the U.S., which accounts for more than 40% of the total, growing by only 1.1% year-on-year in March and by only 1.4% for the first quarter. This is the slowest remittance growth since second quarter of 2020, when the lockdown pushed remittances down significantly.
Yeah, interestingly, our remittance growth has been moderating for the past 3 months, about the time Trump took office. How much of this is because of that and all things that come with it, the weakness in the dollar, the strengthening of the peso, slower jobs growth in the United States, lower oil prices, and the global trade war, as everyone just becomes more cautious globally, and the protectionist policies are really taking center stage right now. What is your outlook for remittances for the balance of the year? I mean, the three months of declines in remittances, do you see that continuing?
Well, our full-year forecast in terms of remittance amount is at $35.5 billion. So that implies a 3% growth, and we gave this forecast last December. But now we are
when everyone is a little more optimistic.
True, because we have seen already the downside risks emanating from the United States, and that's the bulk of our remittance flows. At the same time, we are seeing downside risk to the U.S. economy as a whole because of these new trade policies and immigration policies that are heightening trade policy uncertainty, which in turn is resulting in higher market volatility around the world.
Yeah. Are you worried that the U.S. might fall into a recession?
Well, we have a report entitled U.S. on the brink of a recession. And that's because we have seen the first quarter in negative territory at 0.3%. And that is yet to reflect the full tariff impact that was introduced during Liberation Day in early April. So this quarter, we are also seeing downside risk to the U.S. Growth outlook. Because overnight we saw retail sales, it's flat compared to the more than 1% growth in the prior month. We've seen producer price inflation in the red. And that also talks about potential demand weakness already taking place in the U.S. alone. So that's something that we are closely watching out for, the health of the U.S. economy, because if this turns into a negative, then that will have a negative impact on our remittance flows into the
globally.
Philippines.
Everything's gonna hurt. The downside risk on remittances they're very real. But in the second half, seasonally, because as people send money for tuition and as people send money for the holidays, the second half of the year for cash remittances in the Philippines, it's supposed to be a better picture. What's your outlook for this second half?
Historically, and that's true, the second half has a bigger remittance, particularly in the fourth quarter because of the holiday season. But now we might see some tempering of that growth in remittances in the second half because we have not yet ended this heightened trade policy uncertainty. Even though U.S. has struck deals on trade with the likes of UK and China, but still you have higher global tariffs for now, and that might spill over already into the real economy. So the hard data will now may reflect that we are seeing from the soft data. in terms of sluggishness on sentiment, and that can affect the consumer spend and ultimately the flows of trade, investments, and remittances.
We really look to the U.S. because 40%, 41% of our remittance inflows are from the United States. So what they do, it really matters for us. Apart from the trade policies, there are other things on the docket in the United States. There's the restrictive immigration policy of Donald Trump. There's also the proposal to tax remittance outflows from the U.S. How worried are you about how all of these might affect our remittance inflows to the Philippines?
Yes, that's also another real concern. That's also an addition to our downside risks that we are imputing into our outlook on remittances. Because basically, the U.S. policy is really turning more inward or protectionist in a sense that they want to keep the capital internally, so which means more jobs should be generated locally within the United States, but there's a trade-off, and that is at the expense of the rest of the world. So if you tax remittances from the U.S. into the Philippines or into the rest of the world, then that will also add on to the dampening of the remittance growth outlook.
Your full year remittance forecast for 2025, your house view was for 3% growth. And that was made in December. Given how things are changing, are you going to be revisiting this forecast, perhaps decreasing it in light of the global economic conditions?
That's correct. So we are reviewing our forecast on remittances, and if we see a continual deceleration on remittances from the rest of the world because of the heightened global uncertainty still persisting, then we will likely downgrade our forecast potentially to mid-2s% for as long as there is no worst-case scenario occurring, such as a global recession.
Yeah.
Because if that exists,
then it would be a further,
further erosion
lower,
in the remittance flows. Yes.
Okay. All right. Stepping back a bit, can you walk us through why remittances matter and how vital they are to the Philippine economy in 2025?
Well, it's still an important contributor to our household consumption, which accounts for more than 70% of our GDP.
Consumption driven.
But over time, because our economic growth has been strong and outperforming most of our ASEAN peers, and that's because of the reforms undertaken in the past on infrastructure, job creation, and more investments.
Yeah, we've seen it, and we've seen it reflected in the numbers. If you look at remittances as a share of GDP, it's already less than 10%, unlike several years ago, pre-pandemic, when it was low double digits. So this suggests that, the reforms that have been put forward are gaining traction. What are your thoughts on this?
That is true. Also, over the long term, or over the past 10 years or so, we have seen our economic growth outpacing the rest of the world, at least 5% or close to 6% growth, and that is driving job generation within the economy, our economy. And as a result, that makes our remittances less dependent for household consumption. So it's, in fact, we have estimated that about 8% of remittances would be a share to our GDP. Unlike before, as you mentioned, it's close to low teens share.
Yeah, and that's what we want. We want internally generated jobs so that our Filipinos, our countrymen, don't have to go overseas to find work.
Yes, and that's also reflected in the unemployment rate, which is now less than 4%. That's historically low, even compared to pre-pandemic, when it's between 5 to 6% on average.
Angelo, as we usher in the 20th Congress, this new batch of lawmakers, what are the key measures you would like them to put forward to sustain the momentum so that we can have more jobs locally?
Well, for investors and businesses, it's important that there will be more economic reforms, because we have seen that in the past that these economic reforms have driven the economy to grow faster than the rest of the world. So reforms that are more long-term and not just short-term are essential in terms of boosting jobs, in terms of ensuring the growth trajectory is within the government's target of at least 6%.
Okay, and definitely because we have you with us, we have to ask about your macroeconomic forecasts. Looking ahead, As we enter this second half of the year, what's your macroeconomic outlook for the Philippines? What's your take? I mean, we've got easing inflation. We've got Q1 GDP at 5.4% below expectations. We have expectations that the BSP will decrease interest rates. This as we see moderation in remittance inflows. What's your outlook for this second half and your forecasts for those figures?
For GDP growth in the second half, we're looking at 6%. Partly because of low base effects. Second half last year, it was only at about 5.2 to 5.3%. Secondly, we see the interest rates to be reduced further. After the BSP's 25 basis point cut last month, we are expecting 50 basis points more. The second, we think, will happen in June. And the third, 25 basis point cut, we believe will be in August. So it's a back-to-back cut that will reduce borrowing costs and therefore invigorate the demand side of the economy further. And third, inflation is benign. We have projected the inflation to be a notch below the 2% minimum target range of the government at 1.9%. So we think with the benign inflationary environment, rate cuts can continue, and that will help propel economic growth in the second half.
A supportive environment for growth as we need it. Okay, lastly, I wanted to ask you if you could implement one economic policy, that what would that be and why?
I would like to have a long-term economic agenda, a 50-year plan, so to speak, that will have to include all of the important structural reforms that needed to be undertaken, such as further reducing the cost of doing business, more infrastructure development, ensuring food security in the long term, and also more trade and investment flows in terms of attracting foreign capital and more trade agreements.
A longer view that cannot be budged, not something that's administration to administration.
That's correct.
All right. Okay. Thank you for your time this morning, Angelo. It's good to have you. It's always good to hear from an economist to get a temperature check of what's what.
Thank you also, Mikey.
Okay.